Back with our special Veterans Day show. We want to continue with some more questions from our audience. I want to take a question right now, please. Your name and where you're from.
Good afternoon. My name is Colonel Paul Rumberger. I am originally from Glen Mills, Pennsylvania, but now I reside in the great state of New Jersey here. My question is are we overdue for a, overdue for a real change or a real correction in the market?
Oh, good question. I know we have good opinions on that. Weiss?
Yeah, so I'm sitting in more cash than I typically sit in, and I don't know if we're due for a real correction. Those you just can't, because they happen out of surprise. But here's what I'd say. I'd say that most of the people sitting in this audience, maybe below your rank, that are younger, that you shouldn't worry about that. All you should worry about is just putting money away, whatever you can put away, and not looking at it, and just letting it grow and grow. So corrections, to Srat's point before, you can't market time. Some of the best people I've worked with, you can't pick bottoms and tops, but you take the longer term perspective and your money will compound. The market goes up more than 80% of the time. So trying to pick that 20% is like trying to pick a game that the New York Nets are going to win. New Jersey Nets, right. Brooklyn Nets, whatever.
Thank you for the question. Let's take another one. Please tell us your name, where you're from.
Petty Officer Wicker from Chapel Hill, Tennessee. My question for you is, if I had $10,000 to invest, what would y'all recommend investing in?
Oh, that's a good one too. Stephanie Link, that sounds right up your alley. What do you think?
Well, it's a great question. First and foremost, I'd say diversification is absolutely important. And that's what you have to think about. I think you have to have exposure, and you want to have exposure in the U.S. We have fabulous companies, and they are managing their companies quite well on the top line, on the bottom line. But I think you also want to have exposure internationally. And as that sounds a little scary in this day and age with what's happening with emerging markets, but emerging markets has extremely strong growth. And I think you want to actually have a diversification within emerging markets. So you just don't want to have China exposure, for example, or Brazil exposure. You want to have almost an ETF kind of approach. I also like Europe a lot, especially that it's totally derated this year. So I would spread the money. I would dollar cost average, like Steve just mentioned, and I would focus on that kind of strategy.
Okay, Steph, thank you, and thanks so much for the question as well. Let's have another one. Your name, please, and where you're from.
Major Joseph DeSantis from Pike Creek, Delaware. So is it better to buy stock in mutual funds or in several well-known companies?
Oh, another good one. Jim Lebenthal. That sounds right. Perfect for you.
Well, I'm going to start off, Major, by telling you I'm an active stock picker, so I like to buy individual stocks. But there are advantages to mutual funds, okay? If you have a smaller amount of money and you just want to put a little bit in at a time, quite often a mutual fund can be a way to do it. It can also be a great way if you want to make a sector bet, maybe a particular industry or geographical region. All of that said, going back to the start, I love to pick stocks. I love to look every morning for $1 worth of value in an individual stock selling at 75 cents or 50 cents. To do that, you've got to know something the rest of the world doesn't know. You've got to go investigate that company with all the diligence that you attack your work today. You've got to figure out, why doesn't the market like this particular stock the way I do it? You can do that. And not very many people are doing that, which makes it easier and easier to get the right returns from doing it.
All right, good stuff. Thank you for the question, Jim. Thank you for that answer as well. Let's try and get one more in. Please, your name and where you're from and your question.
Hello, I'm Kristen Mashieski from Lansdale, Pennsylvania. So I recently bought a house. So my question is if owning a house is a solid investment right now.
Ooh, and there is so many questions about what's happening in the housing market. Joe, you want to take that?
Sure, absolutely. Buying a house teaches you about management of debt. Buying a house teaches you about managing a budget. Buying a house is a good investment. Don't let anyone tell you that it's not. For decades, it has been in the American economy at the heart of what all families want to do. And I think right now that premise is being somewhat challenged, but I absolutely believe buying a house is a good investment, and you're not trying to market time it. You're not trying to understand where the interest rate cycle is going to be. If you're doing that, you're speculating on a house. Buy a house as an investment, enjoy it, nurture it, and live there with your family.
You get a good mortgage rate, we hope?
Yes, sir.
Very good. We're glad, because I mean, that is right now such a hot topic on where interest rates are going, and glad to see you locked in that rate. Thanks so much for your question. Joe, thanks so much for the answer as well. We're back once again. Joint Base Dix-Lakehurst, want to continue with our questions from our great studio audience today. Please tell us your name, where you're from, and ask your question.
Hello, my name is Kim Tushkir Eisenhart. I'm from Reading, Pennsylvania. And my question is, do you recommend military members use a thrift savings plan or a commercial investment company for retirement savings?
Good stuff. Thank you so much for that question. Mr. Veteran, Jim Lebenthal, we're going to lean on you for this one.
So I love the question. And the most important thing that somebody who is as young as you are, and hope you feel young because I'm looking at you and I'm like, yeah, is to start the retirement saving early, okay? And the thrift savings plan is a very, very easy way to do that. So I do recommend at this stage of your life and your career, just get it going into the thrift savings plan. Later on, okay, when that pile of money has really built to a larger level, then you can look at other options. But right now, just get started. That's the most important thing. Time is your friend here, and the thrift savings plan is a great way to get started.
Yeah, I'm sure there are a lot of people in this room, at other bases around the world, who are thinking of those very same things. How to save for their own futures.
You can trust this plan too. You don't have a lot of time on your hands when you're doing the work you guys are doing. Just take the easy way.
All right, let's have another question. Your name, please, where you're from, and please ask away.
This is A1C Gia from 87th Air Base Wing. And my question is, if I invest in a mutual fund or something like an ETF, and I keep it for about 10, 20 years, will it eventually gain more than I put into?
Well, we sure hope so. Pete, you want to take that one?
Well, I would say that, if you listen to Warren Buffett, Buffett would say yes, so I say yes. And I look at that. I wouldn't go the ETF route, but the mutual fund route where you've got a nice diverse portfolio, I would say that that would be much greater after 10 years, or you even mentioned 20 years, because you're very young. Yes, absolutely, I think that would be
Let me add to that. I would, if you want, Stephanie was talking about diversification. She was talking about international diversification. She was talking about being domestic. I would invest, frankly, not in a mutual fund, but in an S&P ETF. It's low cost. You'll put it away. In 10 years, 20 years, I can guarantee you, to the extent you can guarantee anything in life, that it will be higher. It's too difficult for your positions, where you have so much to do, to pick out the best manager. And managers turn over, you won't even know it. It's one thing if you align yourself with like a Surratt or with a Jim, and you're with them for a long time. But otherwise, I would just buy an S&P ETF, broad S&P, not a sector.
It's got to be broad.
Broad.
That's the big thing.
S&P
when I said ETF,
500.
I didn't want it to be a very
I would add one more thing, the power of adding money over time. If you dollar cost average in, then you will get the benefit of the markets pulling back down and as well as going up. So over time, yes, it will hopefully be much better.